Welcome, everyone, to the next edition of the Unheated podcast. Thea Ventures, the climate tech fund based in India. This is our sixth edition of the podcast. We're very excited to have Steve here with us from Wavemaker Impact. Wavemaker is a Southeast Asia's first climate tech venture builder focused on various sectors within climate, agriculture and food, transport, industry, and electricity transmission, amongst other sectors. All of Wavemaker Impact's portfolio companies align with its 100 times 100 investment strategy. So, meaning they have to have the potential to reach $100 million in high margin recurring revenue and abate 100 million tons of CO2 emissions per year. And Steve's background is also very interesting. He's an entrepreneur with 28 years of building businesses, most recently Property Guru, which is a profitable tech unicorn. And he's also an angel investor, advisor to 20 plus startups, and a VC partner. In 2019, Steve started Planet Rise to make the world a better place by providing financial support and advisory services to organizations tackling climate change and poverty. He's also a part-time venture partner and LP at Wavemaker Partners. I'm really delighted to have you here, Steve, and looking forward to discussing all elements of climate with you, how you built up Wavemaker Impact and your background. But first, wanted to sort of understand your journey a little bit. So from the sort of property space and working in technology and taking a business all the way from start to scale up to IPO, what actually motivated you to go into climate change and, dedicated that next part of your career to building up this venture builder?
Well, Priya, thanks very much for having me on your podcast. I'm really, really happy to be here. And you and I know each other fairly well, and we've been talking about this whole space for a while now. A fellow climate warrior and trying to make a difference. So my background is as an entrepreneur, and I've been building businesses in the technology space, so mostly internet, mobile, content businesses in Europe, and then for the last 20 years or so in Asia. And I guess, as you said, most recently was around Property Guru. Property Guru is an online real estate company, and what we did was we set out to try and make the whole market a lot more transparent, and because trying to find your home is incredibly frustrating at the best of times, but particularly if it's very opaque and you don't have any information. Everything was in newspapers essentially. And so what we did was just set about digitizing that and bringing it online. And so over a period of about 10 or 11 years when I was running the company, we grew the company from 2 people to 1,300 people, from 1 market in Singapore to 5 markets across Southeast Asia, so Singapore, Malaysia, Indonesia, Thailand, and Vietnam, used by over 30 million people, and then eventually took the company public on the New York Stock Exchange. So the company is EBITDA positive, it's growing nicely and doing well. And so having spent 10, 11 years of my life building that business, and during that process, my kids came along, and I'd sort of missed seeing them grow up. In 2018, I decided to take a step back and hired a CEO and handed the day-to-day operations over. And so that gave me a little bit of headroom to spend a bit of time with family, which is really, really important for me, but also then to think a little bit about what next. And I guess when I started Property Guru with my co-founder in end of 2007, 2008, the online real estate opportunity seemed so obvious. As, I started as a sort of personal frustration thing, just because I had to go and find somewhere in a very hot market, and it was very hard. And it just seemed very, very obvious. It was the most obvious thing to do because big opportunity, strong macro drivers, growing population, people moving into cities, growing affluence meant that people were buying property. And so as a macro trend, $250 billion market, proven business model around the world, and it's just absent here in Southeast Asia. And so that's what led me to start that. So whilst Property Guru seemed obvious in 2008, in 2018, the obvious things in climate, it just, everywhere I looked, the climate drum was beating louder and louder and louder and louder. And having kids also, I guess, helps you kind of tune into some of this stuff as well. But there were record temperatures in Siberia, record wildfires, record floods across west coast of the US, Australia, Pakistan. I started to then research it in a similar way to what I did with Property Guru. And then what I realized is that not only is this the next macro trend, this is the next biggest thing, the single biggest thing that's going to impact all of our lives for multi decades and the next generations. So having a huge problem to solve. There's no bigger problem to solve, I don't think, than climate change, but also a big opportunity as well at the same time. So I started the research, got a little bit overwhelmed, as many people do, because it's all encompassing. It's not just one area like internet, business, property. This is it's biology, chemistry, physics, it's economics, it's government policy, it's tax, it's regulation, it's science, it's innovation, it's affecting consumers, small businesses, large businesses, banks, everything. So everyone has a role to play. And so it can seem a little bit overwhelming at times. But also a huge opportunity. And if you think about the world, if it's going to address climate change, it's going to have to invest trillions and trillions of dollars in moving to net zero. And so close to 95% of the world's economies have made the commitment to net zero. And that basically means they're going to have to make governments, countries, companies, banks, financial institutions are going to have to make considerable investment, worth trillions of dollars to move to a net zero world. And that therefore drives massive opportunity like we've never seen before. So the internet boom that we saw in the 90s for the next 20, 30 years, the next boom is going to be in this green tech space. We don't have a choice, but also governments have signed up to it. So it's not only a big problem to solve, but also a huge opportunity. And I think when you then stand back and think about this problem and also opportunity, what's the best way of solving this? And I think entrepreneurs and founders and startups play a critical role in that innovation process. And so that's what excites me, and that's what kind of led me down this process. And so having just come out of another startup I built, which is Probably Guru, and it was about, was I ready to just jump back into another startup? Because one of the drivers of leaving Probably Guru was to spend a bit more time with my family. And so I wasn't ready at that point to do another startup. And so I thought, how can I possibly play a role in this space? Because I'm a founder, I'm an entrepreneur, I like building businesses. And I had been doing a little bit of angel investing since the early 2000s in tech companies. And so I thought, how do I play a role in shaping the future? And I guess, what I then said, well, I've got some money, and until that 2018, I then started to invest in green companies and companies which were trying to improve the environmental challenges that are faced by climate change. And so over the next 5 or so years, I invested in about 20 companies, all in Asia, mostly B2B, addressing subsegments or segments like food or food waste or industrial heat, clean construction, energy efficiency in buildings, etc. So I invested in a whole bunch of companies, across Asia, and started working with some of these founders. And through that process, learned a lot of things about challenges of building these businesses, about the role that maybe deep tech plays versus existing technology, some of the challenges around scaling across multiple markets, some of the green financial readiness in terms of sustainable finance, and the gaps there as well. And just generally some of the challenges. For me, I guess the most obvious thing was, if I really want to have a very, very big scalable impact, investing with just my own. I always said I would never start a fund because I have friends who've started funds, and I've seen how hard it is building and running a fund, and you know that as well. And so I said I would never do that because I never wanted to go through that process of building a fund. But when I looked at the two choices of either building a sort of an angel syndicate, and trying to use other angel investors to try to achieve this versus maybe building a fund, the most obvious thing seemed like a fund. And so I was very, very grateful that I could, through a company I invested in, which is an energy efficiency company. It was a spin out from Engie, the large energy company, and they had a corporate innovation factory venture builder. So the people who are building these ventures in Engie, I got to meet through that process, and that was Quentin and Marie. And in discussions with them, they had big ambitions about what they wanted to do. They really, really wanted to have a global impact. They wanted to look at all emissions, but were very, very mission aligned. They were doing it from a strong purpose and a strong mission, which was around their kids. They both had kids as well, and so through that investment in that energy efficiency company, we started talking. And it was clear that they had big ambitions, I had big ambitions, and we had come from the same drive. We're doing this for the same reason, and so yeah, we started exploring ideas about 3 years ago, and one of the other venture partners at Wavemaker Partners, Doug, came in as well, and those come to conversation. Then we brought Wavemaker Partners and Paul in on that as well, and so that ultimately led to launching Wavemaker Impact about 2.5 years ago. So it's been in ideation and stage for about 3 years, but we've been live for about 2.5 years.
That's wonderful. Thank you so much for that incredibly fascinating background story, and really incredible to hear about your personal kind of journey throughout this whole space and the evolution of ideas, going from the online tech space and then thinking about how to have a further impact back in 2018, and then going through the investor route as well, and then looking at the venture builder. So actually, that was my next question to sort of dive deeper into is understanding a traditional VC fund obviously has the motivation of essentially handpicking companies, having some core high conviction bets, and then investing and then eventually exiting out of these companies. But beyond board seat or beyond monthly operational calls, et cetera, or help you give to the entrepreneurs, you're not really involved in building those businesses. That's the job of the entrepreneur. But
Yeah,
in the case of a venture
correct.
builder, you're actually taking, kind of executive ownership or, executive drive and actually building these companies. So what was the reason to do that versus a vanilla VC fund? How did you think about differentiating yourself?
Yeah, very good question. I guess it wasn't really born out of trying to differentiate ourselves. It was a bit more born out of, look, we had the opportunity to start from scratch. And so when the five of us got together and we started thinking about this space, we said, how do we start to play a role in this now? What's the way in which we can have the biggest impact? And so we started with essentially with a blank piece of paper and said, look, if we want to have a global impact, we want to impact 10% of the global greenhouse gas emissions, which is it's a 5 gigaton number by 2050. How do you start to do that? With just a blank piece of paper. And we said, okay, well, so where do we start? So we start in Southeast Asia, because all of us are in Southeast Asia. All of us have experience in building businesses in Southeast Asia and scaling companies in Southeast Asia to unicorns and taking them public. And we know Southeast Asia well. We know the investment community well. We know the startup ecosystem very, very well. And so that was the initial focus, Southeast Asia. And then the second thing was, if we're really true about impacting the 10% of the global greenhouse gas emissions, then we need to focus on emissions. And so the next thing was, okay, where are the emissions in Southeast Asia? And to our surprise, there was no carbon emissions map. And so then what we did was we went away and we built a carbon emissions map. We went and said, look, let's piece together and let's build a carbon emissions map, so we know where the emissions are coming from in Southeast Asia. And to our surprise, well, first of all, the emissions map, every country, every region, every continent is going to look very, very different. So in the case of Southeast Asia, what was surprising for us was that 50% of the emissions in Southeast Asia come from food, agri, and land use change. So deforestation, mangrove depletion, and this kind of thing. And then we have about 40% roughly is from buildings and energy powering buildings, and then also manufacturing, industrial processes, and about 12% from all transport. And so next stage is look at where are all the startups and where's all the money going. 2% of all climate tech investment going into Southeast Asia, 70% of that 2% going into mobility and EV. Hundreds and hundreds and hundreds of EV companies, battery rental companies, battery management, battery software, battery replacement, 2-wheel, 3-wheel, 4-wheel, charging networks, etc. That's where all the entrepreneurs are focused and all the money was focused. So what about the 88% of emissions outside of that? And what we realized was that the entrepreneurs were not necessarily as focused on those areas. The investors were not as focused on those areas in Southeast Asia. And so there was a big underserved gap. So that sort of really reopened our eyes that, those are the areas that we should be focusing on. And because there were not the startups and the investors investing and building businesses in those other areas, you then had no choice but to then go and think about, okay, look, we have to start these businesses. We're going to have to build these businesses. And so then we started to build this thesis, which was, okay, can we build businesses that can address some of these opportunities, working with experienced founders. The other conclusion we came to as part of this research process was actually there was a lot of technology already developed which could reduce emissions by 50%. So we have all the technology we need already to reduce emissions by 50% in the next 10 years. Exactly what we need to do. So the question was, why is there not solar on every rooftop, residential or built or commercial, industrial? Why are we still using diesel generators? Why are we still using diesel pumps? Why isn't there more energy efficiency with IoT sensors deployed? All this kind of stuff is technology is already there, but people are not using it. So why are they not using it? So that was one conclusion we came to, and we said, well, okay, if we were able to find experienced entrepreneurs, focus on business model innovation and maybe some digitization and finance, could we build rapidly, because the technology is already there, it's just a business model innovation, could we build rapidly growing ventures that we can deploy across multiple countries, in a fast way to impact, emissions at scale? So we developed this 100 by 100 concept, which is 100 megaton emissions, which is roughly twice the size of Singapore, and 100 million revenue businesses within a decade by doing business model innovation, working with experienced entrepreneurs. And so that's kind of how we started. Over the last, I guess about 2.5 years now, we've built 10 companies, climate tech companies. 7 of the 10 are in food and agri space, and 3 are in, renewable energy or rooftop solar or green finance kind of businesses. That's kind of why I went down the venture build process. And so for those who don't know what this is, I mean, there's different approaches. So you have accelerators who maybe recruit maybe 100 potential founders. We train them how to become a founder, and then you get some idea and bash them together and hope that some of them will come up with something. And eventually, at the other end, out of this hundreds of people, you have maybe 10 companies that get launched and funded or something. That's kind of one approach. What we decided to do is, to say, are there experienced entrepreneurs who've built 1, 2, or 3 companies together who've probably got 10, 15, sometimes 20 years of experience already? They know how to scale, they know how to build teams, they know how to build leadership, they know how to build culture, they know how to go from one country to multiple countries, they know how to build leadership teams and scale companies or businesses. But they don't know where to start. In a similar way to me, 5 years ago, I didn't know where to start in this space. I mean, I had no idea what, and then I got this overwhelmed. In a similar way, we started to bump into people who had built one company, they built 2 companies, that had a lot of experience, and they were really, really, for similar sort of reasons, determined to do something in this climate space, but had no idea about where to start. And they were looking for help. And so what we do is we have a team of 2 or 3 people with the entrepreneur for roughly 5 months, and we start with a blank piece of paper. And in many cases, the entrepreneur has a little bit of a interest in a certain area. It might be around mangroves, or it might be around nature-based solutions, or it might be around agriculture or renewable energy. And then that blank piece where we start to ideate, and then and we sort of keep the funnel very wide. And it's very, very ideas and innovation focus, and then we sort of come down to maybe, oh, actually that looks interesting, and we explore it deeply, and we start talking to hundreds of potential customers to understand their pain points and understand where they're coming from. And in many cases, what happens is you get this like divergence of ideas, convergence, and you hit a dead end. And you come back out again and do the same again, and you come back. And in many cases, there's that kind of very early stage pivoting essentially happens around this process. And at the end of that, the process of 5 or 6 months, the venture and the founder should have an idea which actually is 100 by 100. We've got conviction, and we have essentially 2 ICs. We do a 100 megaton IC, and it has to pass both of those. And we also do the same for founders to make sure that we're choosing the right founders here, because that's our number one KPI. Unlike a normal VC, which is like deal flow, how many deals am I seeing? Our one is, can we identify experienced entrepreneurs? And so we see 250 entrepreneurs for choosing it for every one that we choose. And then our customer is essentially the entrepreneur, and we support the entrepreneur and co-found the business with them over that period. We put $500,000 in initially, and then for the ones that are performing well, we'll put a few $1 million in out of the fund. We'll have a $60 million fund, and so that will support 20 ventures that we built. So we've done 10 out of 20 so far, and we're in the process of building another 4. Yeah, so one of the things that we talk a little bit about is this hard to abate versus easy to abate, and so I guess we kind of see ourselves more as a easy to abate venture builder. So this is like about existing technology, and how do you deploy those existing technologies more rapidly through that business model innovation.
Very interesting. Thanks for sharing that. And with these entrepreneurs, the 10 businesses that you've built so far, is the objective to have, an equal exposure to all of the sectors that you spoke about, that, agriculture and food and others, the ones that are, the 88% of carbon emissions that need to be abated? And how will you sort of conduct your portfolio construction over the next few years of, I know that's probably a question you get asked by your potential investors, but I'm curious to know, I mean, you can't have all 20 operating in food and ag, right? So do you see opportunities in other sectors as well? And what's sort of been the typical business models? I know you've also worked in waste and in construction and other adjacent spaces.
Yeah, so I guess in the sort of the fund language, investment fund language, portfolio construction is the kind of the terminology, I guess. And yes, a traditional VC will have a portfolio construction, and it'll be like around certain themes and certain percentages against those themes. The way in which we think about it is where are the emissions, firstly. So, and then secondly, what's the ikigai of the founder? And what we've seen is that there's normally a thread, sometimes quite an obvious thread, sometimes a bit more tenuous thread between the founder background and founder passion and interest and experience versus where we end up, building the business. So we are, I think, 7 out of 10. I said before, ventures so far in the food and agri and land use change space, 50% of the emissions. So logically, we should be saying 5 versus 10 of the, but it's just the way it's gone in terms of the founder interest, founder background experience, and where we've identified the opportunities. But more recently, he's been doing experience around the supermarkets and also around commercial warehouse and this kind of thing. So there's one that's deviated from that, and we have a residential rooftop solar business in the Philippines called Helios, which has a very strong value proposition. It kind of increases household income by more than 10%. Through this business model innovation again. So we're taking the balance sheet from the mortgage, from the bank, and working with families about how to increase essentially their income by putting rooftop solar on their residential. It increases the revenue, it generates revenue from the house, and so we play a role in sort of orchestrating all of that, plus the solar developers, and doing that at scale. Green finance business. It's based in Singapore, that one, which is around trying to unlock capital for businesses which are deploying for small green companies, deploying green technology at a small level, small solar waste businesses who are trying to have access to finance and trying to unlock that access to finance. There's a bit of a gap, and that's a company called Refi, entrepreneur with close to 20 years experience who's built 2 or 3 companies before, fintech companies, again, management consultancy background, banking background. And so what does that look like going forward? I think it will be more of the same. I think we're not going to force that we need to have something more in transport or something more in industrial and manufacturing. I think it will happen because when you start to stand back and look at where the emissions are, there's huge emission pools in those areas as well, including transport. So whilst the most majority of the investment and startups are in that space and in the mobility space, there are opportunities. So for example, electrification of boats, for example, is one area that we potentially would look at. We have done a little bit of work around, the role of hydrogen. How does that play a role? Even that's more kind of more future technology. But one of our LPs is kind of particularly interested in that space, and so we have looked a little bit around the role of hydrogen as well. We haven't done anything in that space yet. So, but going forward, you will see, I guess, over time, the portfolio construction being more aligned, I guess, to that, because that's we've done a lot already in food and agri, and maybe with the next founder can look, well, okay, you've already done something there, so maybe there'll be somewhere else. So we'll see. We'll see. As I said, it needs to be joined up between the ikigai, the passion point, the experience, the interest of the founder, as well as where the missions are. And so we need to get to 100 by 100, but it's a merging or a evolution of the discussion between the missions and founder, where we end up.
Yeah, understood.
Yeah.
Very
Yeah.
interesting. And when you're measuring this 100 by 100, I guess on the carbon side, you have particular environmental metrics that you're using. Do you sort of request these companies to fill out these KPIs every year? Do you conduct an independent audit, perhaps, of the carbon that's been abated through that company's business model, innovation? How is that sort of measured? Curious to understand.
Yeah, it's a really good question. It's one of the things that keeps us awake at night a little bit, because
Yeah.
every single one of the startups, is focused on reducing CO2 equivalent somehow, whether it's nitrous oxide, or whether it's methane, or it's CO2. It's emissions reduction or a sequestration, but essentially it's a carbon impact. These companies, they're pre-seed, they're a blank piece of paper, they become funded, and they start generating revenue. And if we do our job right, they'll be generating tens of millions of dollars of revenue in the next 3-4 years' time. And so the revenue side is obviously far more obvious, because there's so much inefficiency across Southeast Asia. Every subsector has this inefficiency, and there's opportunities to improve productivity, revenue, yield, price, reduce costs, digitize, use finance to improve revenue or cost for all our customers. So the economic opportunity is a lot clearer and a lot easier to understand. The carbon one is obviously a lot harder. And so many of our companies struggle with this a little bit, and it's something which is keeping us awake. How do we help our companies to better understand, better prioritize, and better measure, report, verify, essentially the MRV piece around carbon? And the way in which we approach it today is twofold. So one is we use existing research. So what research has been conducted already? So if you replace diesel water pump with a solar water pump, it's very clear in terms of what that carbon reduction is. And so if you replace one water pump, it's X tons. If you replace 100, it's 100 times X tons. And so it's a sort of crude, stage appropriate measure of carbon impact. Now, as the company grows and it becomes a bigger organization and becomes more sophisticated, then I guess we can start thinking a bit more clearly around how we measure this and how we get more sophisticated. But ahead of that, we take a fairly simplistic approach, kind of based on unit economics. So it's in the case of Agros, which is around replacing diesel water pumps with solar water pumps initially, then it's around how many solar water pumps do you deploy. In the case of Helios, how many houses do you essentially have with solar rooftop? What we're trying to do then is obviously trying to help the founders trying to decide where they should be focusing, also how they're measuring it. So in the case of RISE, which is our rice decarbonisation, it's around reducing methane reduction. The research showed, that anywhere between up to 80% of methane can be reduced by changing farmer practice, to alternate wet dry and some other processes. But that wasn't good enough for us, and we wanted to go away and prove it to ourselves. And then, so therefore, we did our own gas chamber measurements. We worked with a local university to do some lab analysis. And that showed roughly 50% reduction. So the research is showing 87%. So we were now using our research and taking a very prudent approach. And so that's another way in which we say, look, if the research is showing 1 tons per hectare versus 10 tons per hectare, we're using the 1 ton per hectare, not the 10 tons per hectare. We're taking a prudent approach because making sure that the intention of what we're trying to do is reduce emissions, and there's no point trying to fool ourselves if we think that if research evolves and shows it that 1 ton becomes 5 tons, then we'll start to use 5 tons. Or if we start to measure it ourselves and show that it's higher, then we'll start to do that. But we try to take a prudent approach. That's kind of how we're doing it. What we've also realized, for example, the rice project recently was that whilst we did some initial tests, later on we did some other tests and actually showed the impact was slightly lower. But then we realized actually using biofertilizer. So then your base level versus your new one, you've got to take a different approach each time. So I think you just need to take a prudent and stage appropriate approach. And as time goes on, you need to be able to verify it and prove it. So capturing the data is important. as well. And so we have a company which is looking at deforested and degraded land in Indonesia. There's millions of hectares as a result of agriculture, as a result of mining, as a result of draining peatland, etc. So the soil quality's got to a stage where you can't really grow anything; it's degraded. And so, how do you then choose, for example, which crops to deploy, which so you can try and improve the productivity of land through different techniques. And so we do that. So we take what's degraded land, we improve the soil quality, move the pH to the right level, and treat it correctly. And so we turn this degraded land into more productive, sustainable, and carbon sequestering land. But then you have to choose which crops you put in, and some crops are better at sequestering CO2, and some are not. But some have a higher economic value versus not. So then what's that mix? And then so you're taking a balanced approach to economic opportunity, so you have a sustainable financial business model, but also with the aim of becoming the 100 megaton business as well. And again, working with local universities or research institutes to see how we can kind of provide and measure and support the data.
Fantastic.
What our single impact measurement is CO2 equivalent. So that 100 megaton number, and measuring and moving the business towards reducing at scale 100 megatons. But what we have identified is, because we are looking at business model innovation and therefore looking at economic opportunity, in almost all cases so far, the secondary impact of what we're doing is we're improving livelihoods, or improving the wealth of a community. So if I go back to the Agros example, the farmer's getting 25 to 30% extra income in their pocket, feeding a family of 5, and so that has a secondary impact of livelihood improvement, but also healthcare, education, etc. So same with Bumi Baru in Indonesia, same with Helios, which is improving income with the family by 10%. So whilst we don't focus on that impact measurement as a key metric for us, is a secondary byproduct of what we do. And so improving the wealth or the livelihoods or the income levels, in most cases, the bottom of the pyramid.
That's fantastic. No, thank you so much for sharing that, and particularly encouraging to see how much effort you put into measuring the carbon, units of carbon abated through the research institutions and the R&D labs, etc., triangulating that data so you come up with a conservative estimate, so you're not overestimating how much carbon you're abating. That's really important. And also the social impact as well. Income increase, livelihood generation, and super crucial in these communities where they're very vulnerable populations that are being affected by climate change. So really, really excited to see this.
Absolutely. If you think about just the food and agri space, it's struggling so much with economic pressure, so inflation, rising costs of input, rising costs of finance, rising costs of energy, diesel. The farmers at the end of the day are getting squeezed by all this inflation, and then at the same time, so already very vulnerable but also very vulnerable to climate, and increasingly suffering and at the forefront of the brunt of climate change. It's an important outcome, and we hadn't really kind of thought about this too much until we went down this route. But essentially, if you are, as a byproduct of what you're doing, improving livelihoods, improving income levels, reducing costs, increasing revenue for, let's say, smallholder farmers or small factories, then what you are also doing is increasing resilience to climate change. A secondary impact, which we don't really focus on and measure, is climate resilience, and climate mitigation. The secondary impact of what we're doing is improving that. And so, we had a conversation recently with one of our LPs who, for them, it's really important. They want to really understand it better. We said, look, we don't really focus on it, but they said, look, what you're doing is having such a big impact already on climate resilience. And we go, okay, and we hadn't really processed that. But yeah, so we'd start off with the emissions.
Yeah, absolutely. Very interesting. So as we're, coming towards the end of our conversation, I just had one last question, to ask you about, the performance of your company so far. Given that most of them are or all of them are in Southeast Asia, and then you're looking to raise follow-on capital for these companies, how receptive do you think the market has been, the commercial venture market, and what sort of, outcomes do you want to see for these businesses? Do you want them to sort of go into IPO stage, very similar to what you had achieved with Property Guru, or would you like them to, see, I mean, depending on the sector and the type of business model, obviously, look at consolidation or M&A or some kind of, structural acquisition by any of these larger corporates? And how do you see that growth happening in the companies that you've invested in or building
Wow.
rather?
Okay. So I think the first thing is, I think in terms of the investment community and ecosystem, I think what we've seen is a growing interest and awareness, and quite rightly, right? I mean, the next 1,000 unicorns are going to be green tech unicorns. So it's not surprising, therefore, that you're getting more and more climate funds, sustainability funds, impact funds, raising their first, second, or third funds. You're seeing family offices focusing on this space, and you're also seeing what I call, I guess, traditional VCs who have historically always invested in internet and SaaS businesses and this kind of thing, now trying to get their green credentials and investing in this space. And I must admit, they struggle a little bit because they're now seeing the fact that actually they have to invest in something that's hardware related. Because if you're serious about reducing carbon impact, then that physical, embedded, distributed nature of climate change necessitates physical hardware. So they're struggling a bit with that. But the good thing is there's more and more investors moving into space, either building dedicated funds or building side funds or allocating part of their funds to what they call ESG. And so as an early stage founder built in the climate tech space, you're not going to struggle getting money, which is fantastic. 10 of my companies last year all raised nice big up rounds in the middle of this big funding winter that everyone was talking about. And so the good news is, if you're an experienced founder and you're building a startup and you're building it in the climate tech space, there is the money there. Now, obviously, you have to build a proper team and a proper business, and not just going to be thrown money, but the opportunity is there. So if you've got a good business, you've got and good prospects, and you're building a sustainable business model, then I think you will not struggle to raise equity finance. And I highlight the equity piece because the big bit that is missing is the debt finance piece. And because we're now talking about climate, and we're talking about carbon, we're talking therefore about hardware. And whether it's a deep tech business or whether it's deploying a solar panel or solar pump or energy efficiency, IoT sensors, whatever it might be, there's a hardware element. And it doesn't make any sense raising $5 million equity and deploying $3 million of that to buy a kit. It's a very, very expensive, incredibly expensive way of doing it. And so you need some form of debt finance. And the challenge is there's a big gap still. That 500,000 to the sort of 5 million-ish space for debt is absent. And the banks are struggling or not interested to deal with it. And there are some alternate lenders who might have been quite successful, and therefore the minimum check size has gone from like 1 million to 5 million to 10 million. So there is still a bit of a gap, and that's what kind of keeps me awake at night. And I spend a lot of my time on is, how do we create this? How do we support this? What do we do to get this debt financing piece? And we're working with some of our LPs around this. In fact, the last couple of days, I've been having conversations with the LPs around how do we fill this gap, talking to some of the new investors around this opportunity. And there's an opportunity to build a separate fund, or is it an opportunity to partner? Is it an opportunity to start to seed it? Is it about grants to seed the debt piece? So we're looking at a whole bunch of ideas around that. So the financing bit on the one side is great, on the other side is a bit of a gap. But the good news is there is opportunity. So 3 of the 10 companies that we've built from scratch in Wavemaker have already raised nice big up rounds. The most mature of that company now is on track for doing roughly $8 million US revenue. Now EBITDA positive in the first 2 countries, just gone into the 3rd country, and they're just about to start fundraising. In fact, just started fundraising. That's Agros, for example. And so really, really exciting about the prospects. Really good to see some of these companies now starting to grow. They're sort of becoming millions of dollars of revenue already, strong unit economics, strong contribution margins and gross profit margins, and able to scale nicely. So that all signals well in terms of the future for these businesses, and also for future funding, and also for potential future exit. Now, I guess the challenge in our region, and I guess across emerging markets particularly, and tech, is exits. So where do the exits come from? And so there aren't that many companies that have gone from zero to tech company to an IPO. There's probably there's not that many in the region. And then you start thinking about climate tech, it's even less. And so I think we're in the early stages of that exit where the exits can come from. Will they come from an IPO, or will they come from consolidation and M&A? Historically, what's happened, I guess, in the region, at least in the region I know well, which is Southeast Asia, is the exits have come from M&A. You've got maybe someone who's done a really good job in Indonesia, and then someone who's done a good job in maybe Philippines, and they combine the two companies together, like a payments business, for example. And there's like 100 million here, 100 million here, it becomes $200 million kind of business. You optimize it and you start to build some scale. So I wouldn't be surprised that you see a little bit of that happening over time. So sort of consolidation and M&A predominantly, and that could then, as you start to get companies of bigger scale, maybe it becomes an IPO. We're not really too focused on that yet. We're still, our companies are, the oldest is probably about 3 years old. So we're still early days, and so I think if you're really serious about this 100 by 100 company, it's going to take at least 10 years. So what we find is that the 100 megaton is extremely challenging number to get to. So I don't expect to see a large number of exits in the short term, but as more and more regulatory pressure comes in to stop green technology, as more finance comes in, as more big companies start hiring their CSO and building the chief sustainability officer team and sustainability team, and start investing and thinking about transformation and becoming more green and moving towards net zero, implementing science-based targets and just putting a transformation program in place, these companies are going to be investing, and so that we're going to see this acceleration of adoption of all of these climate tech companies, and so they're going to grow fast. That's going to lead to opportunities for them to acquire or merge and grow. So I'm really optimistic about what that looks like in the future, but it's not going to happen in the short term. This is just way too early. We're just at the start of this whole green boom and climate tech boom, and I think we'll start to see it probably over the next sort of 10 years or so.
Yeah, absolutely. I couldn't agree with you more. I think there are lots of opportunities to sort of wait and watch how this takes place. But I think M&A consolidation, those seem like the most likely options, especially when you have large industry majors and conglomerates for whom this would be a really interesting horizontal integration, in their overall operations.
Absolutely.
And it's very nice to also see that in your companies potentially that they're investing across, or rather operating across different markets within Southeast Asia, and there's a lot of synergies across Indonesia and Thailand and various other geographies that they can potentially look at merging their operations. So very interesting. So thank you so much, Steve, for your time today. Really appreciate it. And we've learned so much. It's been super inspirational, very enriching discussion. Thank you for sharing, especially the methodology in which you measure impact and the kinds of companies that you have in your portfolio. That was certainly for me the very, very insightful. So thanks again, and we really hope to have you back on here and to sort of have more collaboration between our two funds, or rather our fund and your venture
That would
builder.
be great. I would love that. Working with like-minded individuals who have the same mission in mind and have sort of values aligned. That's what gets me out of bed in the morning.
Yes.
It gives me energy, and I would love that around India. If there are any founders who are interested to learn more, want to build a climate tech startup, deploying existing technology, business model innovation, working with like essentially a co-founder in our case, I would love to hear from them. Whilst we're starting in Southeast Asia, we have global aspirations. We built our first business in India. Rise at some point will expand also to India. So we have Elevate Foods with Gayatri, who's running that business, which is around food waste in India, and decarbonizing rice in India. And then we will be building other businesses and expanding in India and other markets as we get to Fund 2. And expanding beyond Southeast Asia in this venture build process. And so definitely opportunities for us to collaborate, but also to collaborate with some of your audience who want to learn more, whether it's about joining a company or starting a company or investing in one of these companies. So very, very happy to talk to.
Yes, absolutely. And so we'll spread the word for sure. And whoever's watching, please do reach out, and we'll put you in touch with Steve. So thanks again, and have a lovely day. Thanks for joining us.
Thanks, Priya. Take care.